Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today, we are going to talk about an extremely interesting scenario in the crypto market. Bitcoin remains stable in a silent but intense battle between financial institutions and long-term holders. At a time when global markets are under pressure from macroeconomic and geopolitical factors, on this Tuesday, the market opened unusually. With the exception of Dogecoin, which fell 1%, practically no other cryptocurrency registered significant movement. The top 10 remained almost entirely static, with price variations below 0.1% across most assets. Bitcoin itself opened the day at $108,756, briefly rising to $109,000 during the early hours, consolidating within a narrow consolidation zone between $107,000 and $110,500, as highlighted by Guilherme Prado, Bitget Brazil's country manager. Meanwhile, the top 100 displayed a different behavior, dominated by losses. More than 80% of the top 100 cryptocurrencies opened the day in negative territory, reflecting a risk-averse environment and widespread caution among traders. In the derivatives market, liquidations totaled $172 million, according to data from CoinLast. Of these, around $113 million came from short positions, while $59.7 million were long positions being closed out. Bitcoin led these liquidations, closely followed by Ethereum, showing that traders remain polarized. Some betting on the continuation of the uptrend, others preparing for possible corrections. According to Guilherme Prado, analyzing Bitcoin from a short-term perspective, we observe a maintained bullish structure, consolidating between $107,000 and $110,500. He emphasized that if there is a clear breakout above $110,500, the price could gain momentum and target new monthly highs, potentially reaching $115,000 to $123,000 still this month. However, he also warned of the alternative scenario. If the $107,000 support level breaks, BTC could test lower levels such as $105,200 and then $102,265, increasing the risk of further liquidations and selling waves. This dynamic illustrates how the market is currently living a delicate moment of technical decision-making, with bulls and bears locked in a quiet but fierce tug-of-war, waiting for clear catalysts that will define the next direction of price action. One of the major external factors influencing stalemate is the growing trade tensions between the United States and China. Recently, Beijing warned the Trump administration about the rise in tariff threats, something that has been unsettling global markets. Over the weekend, the U.S. president announced he would impose additional 10% tariffs on products from any country linked to the BRICS group, a bloc formed by Brazil, Russia, India, China, and South Africa. As China is one of the most influential members of the group, the statement had significant political and economic impact. Trump, however, postponed the application of these tariffs until August 1st, giving countries without prior agreements with the U.S. time to seek bilateral negotiations. Additionally, the president recently announced 25% tariffs on imports from Japan and South Korea, citing unfair trade practices. This climate of trade war has generated uncertainties affecting all markets, including cryptocurrencies, especially considering Bitcoin's growing role as a hedge against monetary and political instability. Despite reduced volatility in Bitcoin's price, analysts remain optimistic about the asset's future. A good example is the well-known technical analyst known as Mr. Wall Street, who identified the formation of an ascending-descending wedge pattern between $90,000 and $110,000, historically associated with accumulation periods before significant new rallies. According to him, this configuration indicates the market hasn't exhausted its upside potential yet and may simply be catching its breath before the next surge in demand. Furthermore, key metrics like the MVRVC score remain far from historical peaks. During bear market cycles, this indicator typically surpasses the level of 8, signaling excessive exuberance. Today, it sits just above 2, suggesting a neutral environment with room for more appreciation. This implies that although there are signs of very short-term selling, the overall market sentiment remains positive, with continuous capital inflows into the sector. especially through ETFs and regulated funds. Another important point raised by experts is the nature of large BTC transfers between wallets. Analyst Ali Martinez emphasized that many of the outflows from big holders do not represent actual sales on the open market, but rather internal allocation adjustments or asset migrations between custodial addresses. This means that even though visible blockchain activity occurs, it doesn't necessarily push prices down, as the coins aren't actually hitting exchanges. This kind of behavior is common among funds and large institutional investors, who often redistribute their exposure without directly selling to the public. As a result, the real impact on supply and demand is minimal, helping to keep prices relatively stable, even amid a packed agenda of macroeconomic and political events. Meanwhile, Mr. Wall Street reinforced his view that Bitcoin could surpass $117,000 and potentially reach $140,000 to $170,000 in the medium term, depending on how technical and macro fundamentals align. The current balance between buying and selling pressure clearly illustrates the complexity of the global scenario. On one side, there's strong institutional inflow, particularly through ETFs traded on U.S. exchanges, which have absorbed much of the individual selling pressure. On the other side, long-term holders appear divided between strategic hodling and profit-taking after the recent rally. While many remain confident in Bitcoin's potential as a digital store of value, others prefer to secure partial gains given the unpredictability of the political and economic landscape. This duality explains the temporary price stability, but also suggests we are approaching a new, decisive phase. Investors should pay close attention to key technical levels and closely monitor U.S. macroeconomic data, including inflation and interest rate cut expectations from the Federal Reserve. Geopolitical events such as the potential escalation of the tariff war can also act as triggers for broader market movements. Stay tuned here on the channel for more exclusive analyses and full coverage of the crypto market.